Ladies and gentlemen, welcome to the Q3 FY23 results conference call of Sheela Foam Limited, hosted by Emkay Global Financial Services. We have with us today Mr. Rahul Gautam, Managing Director, Mr. Rakesh Chahar, Whole-Time Director, Mr. Tushar Gautam, Whole-Time Director and Chief Executive Officer, India Business, and Mr. Devinder Ahuja, Group Finance Controller. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phones. Please note that this conference is being recorded. I would now like to hand the conference over to Ms. Bhavika Chaudhary from Emkay Global Financial Services. Thank you. Over to you, ma'am.
Thank you. Good afternoon, everyone. We would like to welcome the management and thank them for this opportunity. I shall now hand over the call to the management for the opening remarks. Over to you, gentlemen.
Thank you, Bhavika. Am I audible?
Yes, you are.
Yes, sir.
Thank you. Thank you, Bhavika, once again, and thanks to Emkay Global Financial Services for hosting this earnings call. And a very good afternoon to everyone joining us today. It is my pleasure to welcome you all to this conference call for Q3 and the 9 months ended of this financial year FY23. Let me just begin with by saying that both FY22 and FY23 were full of extreme turmoil. We know what happened last year. The close downs and then the opening up. In such conditions and such varying conditions, actually quarter to corresponding quarter comparisons become very distorted. The 9 months to 9 months, just being a little bit a longer period, is a better reflection of the performance. I'm happy to share that your company has registered a growth, albeit a small percentage only, and that too primarily on account of retail inflation. I'm also satisfied to share with you that in spite of continuing fluctuations in raw materials, we have seen sustained expansion in gross margins. However, at the EBITDA level, the numbers show a sub 10% performance. And this is primarily on account of some expenses which can be termed as one-off, however, have to be adjusted to the expense side according to the index. There was an increased advertisement to restart post-dull or closed COVID period. There were some exploratory M&A expenses which are again one-off. But however, as per any index, they have to be accounted for. And there was also some non-cash mark-to-market forex losses, which are clearly one-off and also notional, and they are non-cash. If we account for all this, we would see that we are reasonably above the previous period. The COVID period had also put a stop to all kinds of market surveys, researches, etc. As soon as it got over, the industry restarted the process and the findings were very encouraging. The shift from unorganized to organized continues. And this was after this research was after a lapse of 2.5 years. And this is very encouraging. Second, that market share of your company, Sleepwell brand and the other brands, considerably increased and it further consolidated its leadership position. I'm also happy to share that the subsidiaries of the company in Australia and Spain are continuously increasing their market share as they grow. Both have different realities. However, they are performing well. Both have expansion plans and projects which will come on stream by the middle of this year, and this will further strengthen add their capacities and strengthen their position as far as those markets are concerned. We also recognize that Sheela Foam is not only an economic organization, but also a social organism, and sustainability is of utmost importance. I'm also happy to share with you that we are on track with our ESG or sustainability programs, and our VRSR report is under preparation for this year. With this, I hand over to Bhavika, and we will be happy to answer the questions that may be raised. Thank you.
Thank you very much. We will begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nihal Mahesh Cham from Nuvama. Please go ahead.
Yes, sir. Good evening to the management, and thank you so much.
Nihal, you'll have to speak a bit louder.
Am I audible?
Better. Thanks.
So sorry. My first question was, so you've alluded that there was a base impact because of COVID last year, but if we compare the mattress volumes even to pre-COVID, there is a slight fall which has happened. So just wanted to understand, this is purely because of the current sentiment, or there has been a shift in demand between quarters because of certain marriage-related dates or any other aspect that you may want to highlight?
I must confess that the voice levels which are coming to me are rather low. So let me just repeat the question. You say the mattress volumes are lower, and the question is that is it because of the market sentiments, or is it because of any shift in the consumers? Is that correct?
Yes, consumer sentiment, or generally there has been a shift in the wedding dates also seen between Q3 and Q4, if there was any element of that element. Because if I'm comparing our volumes to pre-COVID, not from last year where you highlighted maybe there was a COVID-based impact. So just comparing it from that perspective.
So Nihal, thanks for the question, and I must say that this, the audio is not so clear. However, let me just say that yes, there is a little bit of a drop in the mattress volumes as far as we are concerned. However, when we compare it to the kind of surveys that etc. that have been done, it appears that there is some changes in the market as far as the size of the market is concerned. But this is purely temporary, purely on account of on account of inflation. And if there is any aberration, or an apparent aberration that is seeming there, it's only temporary, and it'll shift and go back, because the trends are very clear in the research.
Understood. So if I could ask that, have the trends in the month of Jan improved, or currently you're still seeing the uncertainty sustained? If you could just give some sense of that.
So they have, I don't know how much can I say, but they have drastically improved. And that's all. I mean, the month of Jan is just over, but the situation has considerably improved.
So my last question was on the gross margin side. You highlighted that there has been a significant reduction in both TDI, specifically in polyol. So what proportion of the old inventory that we end up using this quarter, and how much of an impact that had in terms of the limitation in the gross margin improvement?
So I think I mentioned that even in the quarter that's gone by, the gross margin has definitely improved. However, when we come down to the EBITDA level, there is a bit of a drop. And this is on account of raw materials fluctuating, however, moving slightly downwards. When we come, as we move forward, the same trend is continuing, and I would say that even if we account for the opening stocks that we have, there would be a positive impact as far as Q4 is concerned.
Just to clarify, so the current gross margins in a way more or less reflect our the current pricing in both the raw materials.
That's right.
Perfect. So that's very helpful. Thank you so much, and I wish you all the best.
Okay.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1 on your touchtone phones at this time. The next question is from the line of Ritesh Shah, an individual investor. Please go ahead.
Hi, sir. Am I audible?
Yes, Ritesh, thanks. Go ahead.
Hi, sir. This is Ritesh from Investec, not an individual investor. Sir, couple of questions. So first is, if you could detail what is our strategy to recoup volumes. So basically, what is the end customer or the end channel that we are looking at, basically to increase volumes? That's one. And what I'm referring to over here is just something beyond EBOs and MBOs that we are already doing. That's the first question. So second question is on update on the expansion plan, along with the timelines for Jabalpur, Spain, and Australia. You did indicate middle of this year, but some specifics would help. Third question is on inorganic growth. Basically, what's the status? Fifth is on the growth engines, and it has 4 buckets. Metrics for every Indian, the exports run rate, railways, the current run rate, and online channel, the current run rate. And I have a fifth question, which is on new initiatives. Would be great, sir, if you could please help with this.
So thank you, Ritesh. I think you've gone through the entire portfolio that we have. But let me first begin with your first question, and that is on the volumes part of it. I just want to say that, Sleepwell, we have been operating through the EBOs, and the footfalls, etc., have been challenging as far as in the recent past is concerned. We are well entrenched on that. Footfalls, as I said, if I look at January, have begun to increase. That will automatically increase the volumes. There is an expansion plan for the EBOs, and that's almost about 400 to 500 extra outlets per year. And that's also on track. I must also add that, of course, Sleepwell was not selling through the MBOs, which continue to be in large number. We address those markets via our other brands, which is Featherfoam and Starlight. Now that we have reached out to or spread out to all of them, our real good push as far as MBOs is going to happen. And we expect that the first initiative of expanding EBOs and putting through the MBOs both will increase our volumes, and that's our strategy for that. As far as Australia and Spain is concerned, so let me take Australia first. Australia has already been having almost a 10%, 12% increase both in its volume as well as its in top line. And the reasons for that, as we see, is people spending more and more as far as home improvement sites are concerned. We expected that COVID would finish and this will also slow down, but it has not, because people are not traveling so much. People have money in their pocket, and people want to. Besides this, it's also the imports that Australia was having, and with these sentiments like Australian made, etc. Those imports have been impacted. Especially imports from China, and there were also some imports from Europe. We see that as a very good sign. And in spite of a mature market, this expansion will continue to grow, or this sentiments will continue to grow. On our plant, which is being set up in the second foaming plant, which is being set up in Adelaide, that has already been installed, and it will be commissioned by the first week of March. And we will start then getting a little more aggressive as far as the market share is concerned. And we believe that there is a lot of imports and other things which can be sort of be catered by us, and therefore increase our presence. Spain, I have said this many times before, we are a very small part of that large market, only 1%, and therefore that even though the European market slumped by almost 25-30% during the Ukraine war, or continuing even after the Ukraine war, in our company we registered just a 10% drop, which has also from January onwards begun to pick up. In fact, the entire order books in January and February were completely filled up, and in February continue to be filled up. We have expansion projects there where the current capacity will be increased, and so today what we are doing is about 12 to 13,000 tons per annum. This will go up to about 17,000 tons per annum. And again, because we are a small part, we expect that all this will be consumed market. Returning back to India, you have also said about the inorganic part of it. So I think the explorations continue, some encouraging, but eventually these things happen when they have to happen. But I can only say that that's encouraging. On the initiatives that Sheela Foam was doing, like a mattress for every Indian, again, we have started to receive the machinery, which was delayed on account of the war, and before that on account of COVID. We started receiving that. We expect somewhere end of this year that project in Jabalpur to begin to get installed and then commissioned soon thereafter. Railways has been good progress. I think railways have also now clearly stated that the product that we supply them is the preferred product for making the coaches, and the quantum is increasing month after month. Anything else? I don't know. You have asked many questions because you haven't missed out on it.
Sir, exports was the other one, and online channel. And sir, if you can please help with a run rate or something for exports, railways, and omni-channel, basically the online channel.
The run rate. So run rate on railways is about 8 to 10 crores per month at the moment. And exports, I would say that there has been ups and downs. Couple of reasons we have talked about in the previous meetings. One was that the infrastructure coming up to speed as far as the supply of orders was concerned. And the second part is that US, which is the largest recipient of these exports, has also been going through its own inflation and a bit of recession that's been there. Recently, there has been the biggest exhibition in the US for mattresses. It was in Las Vegas. Our people were there, and there is, I mean, at the moment I can say the sentiments are encouraging. They are committed to looking at or creating a source besides China, and in India we would be the preferred supplier. However, there is not too much to talk about it, let's say in the last quarter or in this quarter, but I think the year would finish at about 40 crores or so. Definitely a little dissatisfying. Should have been more, but 40, and the coming year I think should see a jump up to about 100. Online, we are treading along or trudging along at a reasonable pace. I think the year should end at about what, Rakesh? No, online.
Online will cross.
So online should also cross 100 crores. However, as I said, we also changed our strategy a little bit, when we were doing it with a different brand, and now we're doing it with Sleepwell, and we have found a way to reduce or almost remove any kind of friction between online and offline, and that is picking up. So I said this year we should close at about 100 or over 100, and the next year would be at least 50 to 60% more than that.
Thank you so much, sir. New initiatives, foray into living room, looking at sofas as an avenue. That was the last one, and probably I'll jump back the queue again with I have some second degree questions, sir.
Maybe I will take that question on sofas. I presume you would have asked many questions for many other people, so that's all right. I would have referred to it. So the sofas, we are manufacturing of sofas. I would be able to talk on this better the next time. Some initiatives on, but as I said, that it will be better if I talk next time on it. However, on the refurbishment of sofas, which continues to be a big business, it's fragmented business. It is very unorganized business, and our initiative to put all that together is now taking shape. I mean, at the moment, I'll share that a pilot is on, where the proposal is that we that as in Sleepwell, will pick your sofa up and do it, refurbish it, and return it back in 3 to 4 days' time.
Sure, sir. This is very helpful, sir. Thanks for all the answers. I'll just join back the queue. Thank you so much.
Thank you. The next question is from the line of Forum Gosar, an individual investor. Please go ahead.
Good evening, sir. I just have one question. We have seen an increase in revenue from the technical foam business. So I just want to understand from where the demand is coming from. Like, did we onboard any new clients?
Thank you, ma'am. Can I just have your name once again, please?
Forum.
Okay. Thank you. So the technical foam, the primary expansion in orders has come from the auto sector. And we all know that the auto sector has been, for the last couple of months, has been doing extremely well or continues to do well. And we have almost about 60, 70, 75% share in that market. And the growth in the technical side, and we are expecting that growth will continue as that expands.
Okay. Thank you, sir. That's it from my side.
Thank you. We have the next question from the line of Siddharth, an individual investor. Please go ahead.
Good afternoon, sir. So actually just wanted to ask you that last time you had mentioned that our management's focus is to increase the productivity of the outlets. So I mean, have we been successful in increasing the footfall, and if not, then when can we expect that to start?
So Siddharth, thanks for that question. Yes, our efforts are beginning to show some results, and the productivity is increased on two actions. One is to increase the footfalls coming into the showrooms, and the second is to increase the conversion of whatever is kind of coming in. The second thing first, conversion. We have taken the help of a company called Quest and got some sales advisors from them, which have been placed at almost about 30-35% of the stores, and they are training the people as well as helping to convert whoever is coming in. And that conversion, we can see that percentage is increasing month-on-month basis. As far as footfalls are concerned, the only way is promotion, advertisement, BTL, ATL activities. And you would have noticed that recently we have begun advertising on the television and even at a local level. And we believe that the footfalls will increase.
All right, sir. That's it from my side. Thank you.
And of course, as I already mentioned to Ritesh earlier, we are expanding the number of showrooms, which definitely will increase the total number of footfalls which we cater to.
All right, sir. Thank you.
Thank you. The next question is from the line of Ritesh Shah, an individual investor. Please go ahead.
Yeah. Hi, sir. Sorry to bother you again. Sir, just wanted to understand the market sizing. So when we are looking at the 15,000-20,000 crores of total market, I appreciate what we're doing on the EBOs and MBOs. But how about the market, basically, say, for the likes of Pepperfry, IKEA, Home Lane? I think that's also incrementally a trend. So how do we approach basically tapping this particular market, or are we already there? And if you're already there, how does the economics work? So that's the first question.
So do you want to complete the questions, or should I respond?
Sir, I'll just like the answer over here, sir.
Okay, thanks. So Ritesh, this is as I am understanding the question, you're saying that the likes of IKEA and Pepperfry, which are primarily furniture or furnishing outlets, they do cater to mattresses, and how are we making our presence felt in that segment? So let me just say that we have already begun looking at what we call as furniture first stores. And these are stores which are not necessarily exclusive mattress stores, however, do furniture as first, and consequently sell mattresses along with the beds that they sell. And that expansion has already begun. We are present in how many markets would we be present at the moment? So about 2,000 we have already got our presence, but as I said, those are not exclusive, and therefore that is done under the Feather Foam brand, which is endorsed by Sleepwell, and that's been reasonably well accepted. So just as to sum up, our response to the IKEAs and the Pepperfrys and all that is to go and be present in the furniture first stores.
Sure. Sir, my question was basically if you look at the mobile population or say tier 1, tier 2, I think probably the population which goes to individual stores, it might be reducing. I'm just giving a hypothetical scenario. And there will be more and more people who might be going to Home Lane, Pepperfry, IKEA, but then they will just go to buy a curtain or something else, and they end up buying a mattress. So from a sample sizing standpoint, if we have to look at the marketplace, so is furniture first the solution that we are looking at, or are we looking at something beyond that to tap the larger marketplace?
So I agree with you that there are some stores which are complete furnishing stores. I agree with you that there is a mobile population which may be very short on time and would not go from a store to store and would want to have a one-stop place and do that. But however, those people, we would be attracting them maybe more with Sleepwell at home or through the e-commerce platform that we are operating on. And I would say that for us really to get into a full-fledged furnishing store at the moment is not a problem.
Sure, sir. And sir, my second question was specifically on the EPE for mattress for every Indian, what we have indicated. Just wanted to check, is it for the first time that it's happening, something of this sort in India, or has it been tried by any of our peers in the past?
No. I don't know. You're connecting the EPE with that mattress for every Indian. So EPE is a completely different product for, which is different from polyurethane foam. Do we do some EPE stuff? Yes, we do. Is it cheaper? It is. However, the availability part of it is still a challenge. It's an extremely light material to be transported all over the place. Our mattress for every Indian foray is primarily to look at people who are not using any kind of mattresses, modern mattresses at the moment. They may be using cotton mattresses, they may be using dharis, chatais, etc. And there are two challenges to it. One is to make the product affordable for them, and the second thing is to make it available to them to where they are, whether in a tehsil block or a cluster of villages that they are. So our project, which is coming up in Jabalpur, the new technology that we talk about, will help us in both these aspects of affordability and as well as accessibility, or making it available to those places. Has it been done before? To the best of my knowledge, no. And generally, it's just the the way that happens, that when you have a new product, a new modern mattress coming up, it goes to the big towns. Then it starts filtering down to tier 2, tier 3, tier 4, tier 5 kind of levels. Here we're just trying to go the other way around, which is start from the bottommost area and try to work upwards and hopefully bridge the gap there.
Right, sir. Possible. So, sir, you indicated it's PU foam, right? For mattress for every Indian. That's what we are looking at.
Yes, it could possibly have one or two other materials, for example, but primarily it is polyurethane foam with the new technology that we would be making.
Okay. And sir, any timelines over here? I presume it's linked with the Jabalpur expansion.
Look,
by when do we
Ritesh,
expect the launch?
So Ritesh, I said that right in the beginning. This project got delayed on account of COVID, then it got delayed on account of the Ukraine war, because the steel, etc., needed to come from there. Our supplier of this technology is based in UK, but we have begun receiving parts of the machine. We expect it to start getting installed anytime by the end of this year.
Sure. And sir, last I had a bookkeeping question. Would it be possible for us to quantify the one-off variables which you indicated on the non-cash M2M forex losses, exploratory M&A expenses? I think you indicated 3 variables, or probably I can take it offline.
I would say that if you really want to understand that in depth, it would be better offline. However, since you talked about the non-cash one, I would say, it is like hedging for the equity that we have invested in Spain. And that equity at the time that we hedged it, which was something like September, at that time the euro was just falling, and it was being expected that this war would continue forever and the euro would always be under threat. We wanted to protect that. We wanted that investment of ours. Generally, we do not hedge equities, but we did that because the euro, and it was a special condition. So when we hedged that, fortunately or unfortunately, number one, the euro has got back some. So at that time it was some 78. Today it's 87, and there is mark to market. It's gone up by a certain amount. Now the index says that you have to have mark to market, and this will be charged to the expenses. So, however, when you have that investment in euros, there is an interest that the bank is giving us, which is almost about 1 crore a quarter, and that interest is as per Indes, not it has to be in the other incomes and OCI, and therefore impacts. So you get a double whammy out of it, and it's all notional. There is no cash impact. There is no nothing. That's one of the examples. I can offline explain the other areas where, on account of this issue, we have been impacted.
Sure, sir. This is very, very helpful. Thank you so much. Wish you good luck.
Yeah.
Thank you. Participants who wish to ask a question may press star and 1 on their touchtone phones. The next question is from the line of Dharma Venkatesan KB, an individual investor. Please go ahead.
Thanks for the opportunity. Good evening, sir, and hope you are doing well.
Thank you. Yes, please go ahead.
Sir, my question is regarding the demand in Europe. So how the things have settled down? Are we seeing demand slightly? Is there any good green shoots in the demand, and how's the thing shaping up there for us?
So demand in Europe has definitely slumped. The market, if we would look at the market, let me first begin by saying that it is the largest market in the world, the entire European Union, but that market has slumped by 25%. We, fortunately, being just 1% of that market and having our own strengths, so even if the market size has shrunk, our share has the potential, is already going up and has the potential of increasing. I mean, we are far, far away from making any kind of an impact on that entire market.
Okay, sir. And my second question is regarding that in the presentation it was mentioned that there was a one-time marketing expense. So is this one-time, or are we going to spend more on brand building from now on? Like, is this going to be a new number going forward?
So thank you for raising it. Look, it's not entirely all one time. There was a time when it was zero time, during the COVID and Corona times. And then when you want to restart, you obviously have to do a little more than necessary to get the momentum back. And that's exactly what has been done on the marketing and sales side. Would it become completely zero? No. But would it be of this level? Also no. And it will settle down at normal levels as we kind of go along. But it is this time or this period when you had to kickstart it, and that's the impact.
Okay, sir. Sir, suppose if you are looking at a longer time frame, let's say 5 years or 10 years, what is the percentage of sales that we would ideally like to have for marketing expense?
So generally, historically it has been about 4%. But as I think our margins expand, we would like it to go up to 5%.
Okay, sir. Fine, sir. Thank you for the opportunity and all the best for the coming quarters, sir.
Thanks.
Thank you. We have the next question from the line of Resham Jain from DSP Investment Managers. Please go ahead.
Hi. Good afternoon, sir. So,
good afternoon, Resham.
Hi, sir. So few clarification and a couple of questions. So first is Jabalpur, when you said end of the year is FY23 or like December 23?
So it's the installations will begin at that time, and it may take still a couple of months. So when I said I meant really the end of the calendar year. However, if I would say that a full streamlined good production, FY24. FY25.
25.
Not FY24. FY24 is right now, right?
Right. Okay. This is FY23.
Right now is FY23. Sorry, FY24 is not FY24. FY24. That is first, starting from 1st April 2024.
Okay. That means next year only. Okay. And so Jabalpur plant will have what kind of capacities and what kind of revenue one can expect from this plant? Let's say 2-3 years down the line.
I will be making a wild guess, absolutely, if 2 years' time. But I would say that about 350 to 400 crores.
Okay. And the second question is on exports. Last time you mentioned that this plant has the capability, the export dedicated plant has a capability to do close to 1 to 1.5 crore per day. So is that understanding right? Which means that the plant must be utilized at close to 10, 12 or 15% utilization only currently, export plant?
So, listen, the Jabalpur plant is for manufacturing of foam. The basic technology.
Export plant, sir.
The export plant, which is close to Mumbai. Is that the one that you're referring to?
Yes. That one you mentioned last time, that you can do 1 to 1.5 crore per day. So that's operating at just 10-15% utilization right now. Is that correct?
Absolutely. That is correct. That's correct.
So that plant must be making losses right now, correct? At this utilization level, it's hard to make money.
You're right that if I just drew up the P&L for that particular plant, it would be making losses. Fortunately, we've not invested too much in the capex side. There is no foaming process that takes place, which is the maximum. It's on rented premises and, of course, has mattress manufacturing and compressing and putting them in a box, etc., and doing that. So, yes, as a standalone, it is making losses.
Okay. Right. So the third question is on Spain business. What you told us is that it's a very small market. We are expanding capacity by some 5,000 odd tons. But is there a possibility for you to expand there in like a step jump kind of thing over there, or this will be like 20, 30%, 40% increase in capacity like that only, given a significantly large opportunity available over there?
This is about Spain, right?
Yes, sir.
Okay. So, the opportunity is much bigger than what I'm talking about. Number one, this plant is located in a small town or in an industrial area, where there is production of sofas, mattresses, shoes, and a lot of furniture. We don't even cater to 10% of the requirement of that area. I'm just painting the picture to tell you that what the opportunity is like here. Plus, this is the only plant in the entire European. No, there is one more in Italy, small one, which uses a completely green technology for manufacturing foam. Europeans, the characteristic of green technology has lot of meaning to them, and therefore this is the only plant that is there. Third, it's also not too far away from the US. There have been exports from there. However, because the entire US market has been a bit down, the exports have come down, but that opportunity will come. So with these three, four advantages that it has, and having a very small share, and expanding its capacity to at least 50% more than what it is doing now, the future is only extremely bright for it.
Okay. And the last one, sir, is on competition. Has there, because on online space we have seen a lot of players, and it seems that some kind of rationality has come back in the market. So any comments on the competition on the online side? And few of the online players have now started opening offline mode as well. So how are you seeing the overall competition both on online as well as offline side?
So Resham, point number one that I want to say is that as it has happened at other places in the world where online started much earlier, there is what should I say, a dynamic balance between offline and online that will come about. Generally, it has been 15% of the total market. During the COVID, and I'm talking of US, it went up to 20+%, but now has slid back to 17, 18%. And those people measure their numbers pretty accurately. Therefore, as we go ahead, or let's say, what do we see the end game like? There will be online and offline. The online will be about anything between 15 to 20%. If it's any upwards of 15%, I think that will be a great achievement. Currently, we should be tracking at more like 7, 8, 9% or 10%, something of that order. So there is that. Now, the second point is that as far as online is concerned, we, Sheela Foam and Sleepwell, are also present on it and reasonably strongly present on it. We took our time to get our strategy right. Now we have the strategy, and we will be doing that. Because of this balance between online and offline, all the people who started online and will continue in the mattress business will have the temptation to go offline too, because 85% business is going to be there and 15% is only going to be online. So they've, that's one part. The second part is that online businesses have been losing money, and with this change in the sentiments, and not only the sentiments of the investees, but also the investors saying that money costs, and therefore we cannot continue to burn money. They have to go offline. So this will happen, and online will become, or has become, just another channel to reach out to the consumers or to the customers. Otherwise, there is nothing more to it. Of course, it made its halla and noise and this and that. But at the end of the day, just to reach the 100%, this will have a 10 to 15% way or mode of reaching the consumer.
Okay, sir. Perfect. Thank you. All the best.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and 1. The next question is from the line of Ritesh Shah, an individual investor. Please go ahead.
Hi, sir. Thanks for the opportunity. Again, sir, one last question. Sir, what is it that we are scouting when we are saying that we are open to inorganic growth? And any numbers that you can help us with either side, or whether the equation basically can it be EPS dilutive, or will ensure that it will be EPS accretive?
Ritesh, you always ask very difficult questions. Let me say that on the what are we looking for? So as far as India and the Indian market is concerned, we look for businesses which are consumer facing. That is something that we think or we believe that we understand, which is the consumer. We understand the diversity in India that exists, and by our sheer presence and the number of years that we have been here, I think we do an okay job for that. So we are happy to look at businesses which are consumer facing and which would align themselves well with what we do. As far as outside of India is concerned, we would look at businesses which manufacture foam, because that alignment comes easily to us, which is procurement of material, formulations, technologies to manufacture, and just to sell foam to other people. We do not understand the markets, the consumer outside India, and we will hesitate, or by and large, we will not touch any business which does that. That is as far as the strategy or our philosophy is concerned. On the Indian side, and let me just say the opportunities are there, are present. At this point of time, I may be constrained to speak anything more about it. Of course, our effort will be that it is EBITDA accretive. It should help, may not help right away, but at least on a stable basis, as soon as stability happens, etc., it should be accretive. It should give us more strength in the market. So at this time, Ritesh, I'll not be able to say anything more than that, because most of the times these things are work in progress and do take their time.
Sure, sir. Thank you. Thank you so much for the answer, sir. Thank you.
Thank you. Participants who wish to ask questions may press star and 1 at this time. The next question is from the line of Amit Bora from SBI Mutual Fund. Please go ahead.
Yeah, hi sir. I had one question on foam core business as well as technical foam business in India. It has seen a sharp decline in more than 20% almost decline. Any reason you want to highlight, or is it only the high base of the last quarter, sequential quarter? Also, the realization in the same seems to have declined by around 2% and 7%. So how does this price transfer, or how does this happen in terms of fall in raw material? How do you transfer the pricing to the end customer?
So is it on the foam core side or the technical foam side? Which side? Because they are two separate segments. Which one, or is it both that you're both?
Foam core, yeah. Yeah, foam core.
Yeah. So as far as foam cores is concerned, they are generally sold to more, let's say, not unorganized, but let's say lesser organized people. And it's a business through the distribution channels, and therefore the pricing is completely determined by us, and we change it as and when we think that it is the right thing to do. On the technical foam side, the customers are B2B, more established, some cases even bigger than us, and we have formulae for them, which is a rise and fall clause, and we go along that way. We progress that. Yeah, these numbers that you see, the shifts that you see, honestly, Amit, the quarter is too short a time really for looking, especially when the fluctuations are far and many. And so, there is inventory which plays a part. There is changing prices which play a part. In the long run, eventually they get passed on, but in a short term, and the way that the accounting is done, you may have this feeling or experience that we have shortchanged ourselves, or we have reduced somewhere as far as our data points are concerned. In this world, quarter is too small a period. But we have mechanisms in both to account for changing raw material prices.
Sure, sir. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 at this time. We have the next question from the line of Rakesh Kumar, an individual investor. Please go ahead.
Hi, thank you for the opportunity. Sir, I had a couple of questions. First, on what is your view on how the competitive scenario in the offline and mattress industry is evolving across different regions? I think that's the first question. And second, across the different, economic buckets, or let's say ASP buckets, where do you see the volume growth really coming from in the mattress space, and what will be the impact on the margins going forward?
Thank you, Rakesh. So competitive scenario in the various regions. Historically, most of the organized mattress manufacturing companies have been based out of South. And that's because historically, and I'm talking of 20, 25, 30 years back, that coir and rubberized coir mattresses were primarily the dominant ones. So at the moment, that number is definitely changing. North and west, a little bit in the east are increasing. The companies on the organized sector are increasing. However, South continues to be because of historical regions, and its share may be reducing, but still would be the largest as far as the organized mattress market is concerned. On the products, I would say that traditionally, because South has been the coir market, more products are coir-based products. East also has been a bit of a coir market. They are like that. North and west have been more foam-oriented. The change from coir to foam is happening, but there is a baseline numbers which are there. Besides these two, there is the spring mattresses, which continue to grow. They have a small baseline. They continue to grow, and I don't think that there is any regional delta or a differential in their growth. They are there. They just meet the with various challenges of sizes and sizing and base and the kind of beds that are used, and that's almost all across the country. Your second question was on ASPs. So I would say that currently, and this is for a single mattress, 15 to 20,000 number. It's for a single mattress. Is that right, Rakesh?
No. So my question is slightly different. My question was across different price bands. Let's say one in which for instance, Starlight and Feather Foam would belong, and the other one in which sort of, let's say, the Sleepwell brand would belong. Across these two buckets, where do you see the growth really coming from? And second, on a longer term basis, as this plays out, what do you see the impact on margin to be?
Undoubtedly, the growth will come on a slightly lower ASP. Undoubtedly. The effort of all the manufacturers and including us, and we need to lead that way, we have to keep adding value to the product and keep trying to increase the ASP. It's a slow process, quite adversely impacted during the COVID times. However, that effort will always continue. Currently, if I was to look, both the Feather Foams and Starlights that you're saying definitely have a larger potential for growth in the areas or in the price ranges that they are operating, which is close to about a 10,000 number.
Understood. So on my first question, if you don't mind, I just had a follow-up. My question was more around how do you see the competitive dynamics in different regions evolving? And as you pointed out, the number of organized players in the south is very, very high compared to the other regions. We just wanted to understand how are the competitive dynamics different and how are we performing across different regions?
So first, your last question first, which is to say how are we performing? Definitely, our real strong areas are north and west. Our share in the south is increasing, but we are definitely not leading that position there. There are others who lead that. And east is a relatively small market, but that market too, I mean, we would be number two in that area. But it's also a small market, east side one. How do we see that unfolding in the future? Rakesh, I would say that there would be more consolidation processes going on. There would be M&As which will be on account of that. And because, it's all because of so many years by, every company, sort of unfolds in its own style, and somewhere or the other does hit a bit of a hurdle in its progress. And COVID has also not been very generous to us. So if I see the next 2 years or so, 2 years, I see a lot of consolidation happening here.
Understood. Very helpful, sir.
And we are well placed for that. That's all I can say.
Understood. No, very helpful input, sir. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments. Over to you, sir.
Thank you. Thanks a lot. Thank you for conducting the call, and thank you all for participating in this call. I sincerely hope that we have been able to answer your questions as well as we could, but however to action. I would say that if there are any more follow-up questions, please reach out to us, or you can reach out to us through our advisors, Valorem. I can say on behalf of myself and the entire team that, as always, it has been a good learning exercise for us, and we take this interaction extremely seriously and follow it up with whatever that we have done. So thank you very much, and wishing all of you a very good weekend, and see you again in the next call. Thank you.
Thank you. On behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you.